Hi, I'm Professor Suneel Maheshwari with the Department of Accounting at Indiana University of Pennsylvania. Today we'll be talking about the designing and use of bank reconciliation for the internal control purposes in an organization. When you're designing a bank reconciliation, following documents are used to control a bank account. First is your signature card to make sure the signature on the checks is an authorized signatory. This protects against forgeries. Then there is a deposit ticket that is a proof of a organization depositing the check, and checks is what is written by the organization to make payments, and it is made to a certain payee and then authorized or signed by the authorized signatory. This is how a check or with a remittance advice would look like. You've got the maker, that is the organization who is writing the check. You've got the payee, that is to whom the check is being paid. There's this check serial number which controls the order in which the check is being written. You've got the bank which is sending you the bank statement or the bank with which you have the account, and then you have got the authorized signatories. Bank statement is a summary of activities that has taken place during the month. So it would have all the deposits, it will have all the charges against the account you have with the bank. So this is from the bank's perspective, the balance that you have in your account with the bank. What does bank reconciliation does? Company maintains a cash record and a bank balance. Now, the record that is being maintained by the company, will call it cash, and then the difference between the two, that is the records maintained by the company and the records maintained by the bank, might be different. The balance might be different in them. So what does bank reconciliation do? Bank reconciliation reconciles the differences between the two accounts, that is the cash account maintained in the company's ledger and the bank statement, which is the record from the bank. So if you look at the bank reconciliation on the bank side, what are the transactions that the bank will come to know about at first? Or what are the transactions which the company will come to know about first? So if you have got a deposit in transit, that is you made the deposit and you have already included that in the books, but the bank comes to know about it a little bit later. Then you might have checks that you might have written, and those might be presented a little bit later by the payee to the bank, and those are called outstanding checks. There might be some errors that might have been made. Similarly, on the book side, what you might need to reconcile is some items might be collected directly by the bank, or some electronic fund transfer might have taken place in your account, about which you will come to know later when you receive the bank statement. Similarly, the service charge or the interest revenue or the interest paid by the bank will be known to the bank first. There's another item called NSF checks, or non-sufficient funds check. You have deposited a check in the bank, but the check has not been honored or the person who has written the check does not have sufficient funds in the account to pay or honor the commitment that was made. Those are called non-sufficient funds check. In this case, the bank will send you the check and charge your account by that amount of the check plus a certain fees. So the bank will come to know about this first, and then you will come to know about it when you get the NSF check in the mail. So that will create a time lag and a difference between the book side and the bank side, or any book errors. Here is an illustration which we will go through to create a bank reconciliation statement. For example, on December 31st, there's a bank balance of $5,900 for Mid-Atlantic Manufacturing Company, and the company's cash balance shows $3,340. So between $5,900 and $3,340, there is a difference. And how do we account for this difference, or how do we reconcile this difference? That's what the purpose of bank reconciliation statement is. And there are about 10 transactions which we'll go through now to make the bank reconciliation statement. The starting point is the balances. So you start with the cash balance. Say your cash balance as stated in the problem is $5,900. Then you had made the deposit, but it is not recorded by the bank. So as per the bank, the balance is less by $1,600. So you add that $1,600, the deposit in transit, so that your bank balance is reconciled with the cash balance. Similarly, there is a correction of bank error. We'll go over that correction of bank error. It tells you in item number 7, there's a book error. You recorded check 333 for $510. The amount you actually paid on the account was $150, and add $360 to your book balance. So it tells you over there to add the book balance to the book balance. That is on the book side. Look at item number 2 that shows you the bank error. The bank has deducted $100 for a check written by another company. Add $100 to the bank balance. So in this case, the bank has deducted $100, and you need to record that back. So you added that back so that your balance is as per the bank account. Next is outstanding checks. So there are outstanding checks of $1,340, and they will be subtracted. Why? Because those are the checks that you have written, and you reduced them. You reduced your cash balance by the amount of $1,340, but it will only be reduced when it is presented to the bank. So to reconcile it, the balance, you have reduced the outstanding checks by $1,340. So those were the first 3 or 4 transactions. Then you look at the transactions, for example, bank collection of your account receivable of $2,100, or interest revenue earned on your bank balance of $30. So those are the transactions which bank comes to know of them first. So, and you will come to know about it later. So you will need to make the adjustment in your books. For example, electronic fund transfer receipt or dividends of $900. So bank received the dividends, it credited or it added the balance to your account, but you came to know about it later, so you added that electronic fund transfer from the dividends. Then bank collected $2,100 on your behalf, and since you did not, to reconcile it with the bank balance, you increase your bank cash balance by $2,100. Bank gave you interest, and bank knows about it first, so you'll have to reconcile it in the cash balance as per the books and add that balance. Similarly, there's a correction of book error of check number 333. Now this was the item number 7. There's a book error. You recorded check number 333 for $510, but what was paid was only $150. So you deducted an additional balance of $360 from your account. So you need to correct that balance of $360, and you can correct that balance by adding it to the cash book, so that $360 is now accounted for. Service charges by the bank needs to be adjusted and you will reduce your cash balance when you come to know about it. For the NSF checks or non-sufficient funds check, the bank has sent you the non-sufficient fund check back, and it is deducted, and therefore you also need to deduct, and it is need to deduct the $50 that the bank has charged your account. And electronic fund transfer of automatic fund transfer, the insurance expense needs to be adjusted so that your adjusted book balance will come to 6260. So when you have made the adjustments, both the balances will balance, and that balancing statement is called the bank reconciliation statement. Now, how do you make the journal entries for these adjustments that are made? You'll make journal entries for the cash balance as per the adjustment made to the cash balance. For example, electronic fund transfer receipt of dividends for $900. This has increased your cash balance, so your cash is debited by $900, and it is in the form of a dividend revenue, so dividend revenue is credited by $900. Similarly, your bank reconciliation, a bank collection of account receivable, you have got $2,100 against the account receivable, so you'll make a journal entry to make that adjustment. Then the interest revenue received from the bank, your cash balance has increased, your interest revenue has increased, so it is credited. You made an error for payment, so your cash balance has increased, so you debited the cash and credited the accounts payable. Similarly, for the service charges, your expense has increased. At the same time, your cash has gone down. Therefore, the cash is credited and service charges or miscellaneous expenses debited. In the NSF checks, you are now again entitled to receive that account receivable, and your account receivable has been needs to be created because you didn't get the money, and you have to pay from your pocket on that $50. Now you'll be collecting later on. EFT payments for the insurance expense, you made the insurance expense payment electronically, and the bank balance, the cash balance needs to be reduced to come to 6260. So what are the reconciling items? In the bank, you will reconcile the deposits in transit. You'll subtract the outstanding checks, add or subtract the correction of bank errors depending upon what the error is. Similarly, in the book balance, you will add the bank collections, interest revenue, and EFT receipts. That is all that has been collected by the bank first, or the bank comes to know about these first. And then you'll subtract the service charges, NSF checks, or any electronic fund transfer payments. In terms of correction of book errors, you will add or subtract the correction of book errors depending upon what the error is. Here is another example of bank reconciliation. There's a lot of information over here to read, but it starts with the Logan operations of a skating rink, and the bank statement shows an ending balance of $1,500. And here are some of the items which are listed on the bank collection of accounts. So bank collected account receivable of $818. It charged a service charge of $14, 2 NSF checks totaling $240, and $20 charge for the period. So all these adjustments will need to be made in the cash balance. And then again, on the bank side, there are errors like there is reconciliation that needs to be done for outstanding checks and deposit in transit, and an error. So the starting point, as we said, is the bank balance or cash balance in the books, depending upon whichever you want to start with. So Logan's cash balance on July 31st is $37.52, and the bank balance is $1,500. Note over here, there is a discrepancy in the balances. Here are the listed on the bank statement are the following: collection of an account receivable of 818. So this was collected by the bank first, and therefore it needs to be added to the books for $818 to account for that. A service charge of $14 was made by the bank first, so it reduced the bank balance, and you need to reduce that service charge from the books so that the bank balance and the book balance is matching. Then there are two NSF checks of $240. So bank basically charge your account, and now you need to reduce that NSF check from your account so that it balances. Similarly, bank charged $20 for printing checks, and now you need to reduce that to match the bank balance. Now, as far as the bank side is concerned, there was a deposit in transit, 3530, which you had already added in your books when you deposited the amount, and you probably have a deposit receipt for that. So that needs to be added to the bank balance to match the cash balance in the books. Similarly, outstanding checks of 1220 were written off from the books earlier, but it needs to be reduced from the bank balance as well so that the balance could match. Also during July, Logan has recorded $540 of check for salary for the part-time employee is $54. So there was an error over there. A check of $540 was recorded as 54. So you need to reduce that further, your book balance, by $486. And when you have made these adjustments, all these adjustments, you've got a bank balance of 3810 and the book balance of 3810 in your book. And this is how you prepare a bank reconciliation statement. Thank you very much for your attention. Have a good day.